economy should function for the benefit of our citizens. And our citizens' most pressing need is housing. If you look at every major market in the country, there are housing shortages. And affordability for housing has declined significantly. And so that's driven heavily by interest rates. And we got to a point of the highest levels of homeownership in our country's history. And we want to get as many Americans as possible to own their own homes. So I think that's one of the functions that the Fed needs to pay more attention to. And it's one of the hidden elements of inflation. So the cost of owning a home in this country has more than doubled in the last 3 years. That is a staggering impact. And I think we've got to focus on that because it's housing and satisfying the housing demand that generates, millions of jobs in this country. And until we start, and what we're going to see here is a slowdown of the economy, and we're not going to be able to turn it around. And so I think they're reducing rates at the Fed too slowly. Obviously, I think the market says they're going to do it by June, and the consensus is about three quarters of a point. I think they got to do better than 75 basis points. I think the first reduction should be 50 basis points. That should happen next week, but it won't.
Is there, Don, is there, sorry to interrupt you, my friend. Is there a part of you at all in those quiet moments that you think, are they doing this on purpose to try to drive down borrowing costs? Like it all seems weird.
Mm-hmm. It seems very weird. And it's almost like they're setting up a recession nearly, and certainly a real estate crisis that smart investors are going to benefit from. I mean, again, we set up a new business to focus on converting office buildings into different uses like hospitality and residential. And we've already raised a third of the first fund, and we're continuing. And we look like we're going to do another one. But I mean, there's going to be tremendous opportunity, similar to back in the early 90s when Bill Clinton came in, and it was during the junk bond crises and the FDIC and savings and loan crises, and there was a massive redistribution of wealth.
Don Peebles, fascinating take. As always, we would expect nothing less. Don, thank you very much.